Hello and welcome. And, with some bit of clarity with regard to geopolitics, the entire narrative, at least here in India, shifts towards the monsoon. And Insecticides India is one of those which has a direct impact in terms of business to the monsoon. And we'll try and get a perspective of what's playing out over there. You're seeing absolute flat stock move over the last 6 months, thereabouts. But let's quickly look at Insecticides India as a business. It was incorporated in 1996, listed in 2007 on exchanges. It's an integrated crop protection and nutrition solutions company. It's not part of any large conglomerate, 72% held by promoters, and has a market cap of around 2,000 crore. That's really the context. In terms of what's unique about Insecticides India, and the first most unique proposition is that it obviously makes products which are there to protect Indian crop. A large chunk of the top line is India facing and India centric in terms of revenue. It's attempting to climb out of being a commodity formulator to a premium, high-tech, licensed brand. Really, that's the key narrative in terms of the story. It's currently doing generic insecticides, which is thin margins, low loyalty, easily switchable in terms of pricing. What they're doing now is they're getting into licenses with the likes of Nissan Chemicals and Corteva. They've already done this, by the way, so it's already played out. But that's what they're really aiming at, using their distribution muscle to have licenses with global giants, which have unique products, not just generic products, and therefore, and that gives them a far better margin. They're calling this the Maharatna portfolio, and the margins there are 2 to 3x higher than the generics portfolio, and therefore premiumization is really the play, where you've got around 50 to 55% in terms of top line contributing to premium products. You will likely have that moving towards 70%. The question is how quickly. And the question obviously is, what does this do from a working capital and from an efficiency standpoint? We'll try and get to that in just a bit. Let's talk about the products now. And what Insecticides India does is around 140 plus formulation products across crop protection, 20 plus technical active ingredient products is also what it does. The insecticide formulations are for crop control, crop damage from insects, pests. Herbicide formulations are for weed control. Cereals, pulses, oilseeds, horticulture is what that covers. You've got fungicides as well for fungal disease control, biologicals and plant growth regulators. This is again a very interesting part of the portfolio. Biologicals in particular, because they allow, for example, plants to grow roots which are stronger, firmer to the ground, and able to absorb water more efficiently, for example. And then there are plant growth regulators, which allow plants to grow quicker and more efficiently. Then there's technical manufacturing. Again, this is one of the other interesting verticals where they're trying to shift away from China. China obviously provides some bit of raw materials linked to crude as well. So one, supply becomes a problem sometimes. Second, it's crude linked, and therefore you have it's extremely commoditized, and therefore the pass-through sometimes becomes difficult. When you do it in-house, you also retain some of the margins, and that's what they're really trying to achieve in terms of raw material, and that's what technical manufacturing essentially is. And this avoids all of the disruption of supply coming in from China. Lots of brands, and Green Label being the biggest one that Insecticides India has. In terms of it's a paddy herbicide, technically speaking, and it's a scale leader. They've done very well here in this space. West Bengal, UP, Punjab, Andhra, just some of the states in which Green Label is extremely big and probably very low in terms of having other competitors in this space. And that's what makes Insecticides India's brand Green Label unique. Then there is Tori and Tori Super. This is again a patented drug coming, or rather patented maize herbicide coming from Nissan, which has been developed with Nissan. You've got Shinwa. Then this is all part of the Maharatna portfolio now. So you've got Green Label as the mainstay, one of the big generic brands that Insecticides India has built. And then you've got all of the other Maharatna brands which come under Nissan. And Izuki, Mission and Centran, There's Altair as well. I'll just quickly take you through them. Shinwa is an insecticide, which is again by Nissan. Izuki is a patented insecticide again from Nissan. The label claims across, the label has claims across 6 crops. You've got Mission and Centran, which is again an insecticide and has a mixture of various use cases. You've got Altair, which is a patented pre-emergent rice herbicide, again from Nissan. The Sparkle from Corteva, which is a brown plant hopper control insecticide. There is Million, which is a rice herbicide, and using technical manufacturing in-house is what they have developed this based on. And then there are a couple of other brands as well, which Insecticides India owns as well as distributes. In terms of geography, and this again becomes critical, you've got approximately 95% of the sales which are domestic, 5% is export. The goal is to increase export, and as exports go up, it's again margin accretive. So the plan is to try and double exports over the next couple of years. I mean, whether they're successful or not is really the question. And within domestic as well, again, important to note, out of this 95% which sits in the domestic basket, 73% is B2C. So you've got better margins there. B2B is just 22% of the top of the 95% here. So you've got 73% of the top line coming straight from B2C, again showing very strong distribution reach that Insecticides India has. Exports is approximately 5% as on your screen. In terms of the distribution, let me go straight to that rather than the business model. I think I've kind of explained the business model broadly. Sells to 75 lakh farmers in India, 8,500 distributors, 70,000 retailers, service nationwide, sales and marketing team of 750 plus, and they've got crop advisors, 1,200 plus crop advisors operating across India, which also helps them get a good pulse of what's working on ground and what's not. Important for a company like Insecticides India. Let me talk of the financials, and growth has been tough to come. Last 3 years, the CAGR growth is just 6%, but you can see the last 5 years in terms of the numbers stacked up in front of you. There's been a fair bit of consistency with regard to the growth, but sharp growth came only between FY22 and 23, which has been left out of the CAGR growth, just for your perspective. In terms of EBITDA, 23% growth on EBITDA, so the margins have gotten better, but last couple of margins have, or rather the EBITDA absolute number hasn't inched upwards despite the decentish 5-6%, 7% growth in top line. EBITDA hasn't reflected that, and that's why you continuously start to see margin pressure come on Insecticides India. That's what we're really seeing from here. Also, this 23% growth is on a very low base of FY23, as you can see. FY22 was a much stronger year, and FY23 the base sits extremely low, and therefore that is something you want to also discount as part of this 3-year CAGR number. When you're looking at net profit, that has grown at 30% as a result of the same thing which I just spoke about, the growth has been extremely strong because of the depressed base of FY23. When you look at the margin trajectory, margins fell to sub 7% in FY23, came straight back to 8 in FY24, climbed back to 11, sank to 10.5 in FY26. That's how the margin trajectory has played out. So something to consider, that margins aren't the most stable, but there is a goal to try and build in stability to the margin number. And I've spoken about a plethora of things as part of the outlook for the company earlier, which suggests that they are looking at more margin resilience in the portfolio. When you're looking at the balance sheet, it's around a 1,250 crore balance sheet in terms of equity size, and therefore, just about less than 2 times book is what this one trades at. When you're looking at the borrowing number, it's at around 150 crore. So you've seen a decent rise in the quantum of borrowing last year versus this year, but cash balances have also gone up as a result. You've seen a decent rise in interest expenditure as well this year. And we'll try and quiz management as to how some of those metrics are playing out. When you're looking at cash flow, well, it's been tough to come, and I'll just try and quickly give you a breakup. Cash flow has been tough to come, and that's because of inventory being one of the factors, but also receivables being the other factor. There's been 100 crore increase in receivables this year. Inventory, there's been a bit of unwind, but the receivables increasing hasn't helped. Also, the payables have come off sharply. And as a result of that, you've continuously seen working capital being one of the issues that Insecticides India faces. If they can work on that and unwind that, that could be a crucial positive for the company as well. You're looking at return ratios, which are surplus of 13%, surely looks very decent for a company with a price to earnings multiple of 15 times. But nonetheless, there's inconsistency there as well. A 10% in FY23, depressed ROC, but that's again a one-off year. Again, something to keep in mind. We've been cautious on this one, and that's why I've given this a neutral. Otherwise, it's largely a decent return ratio number to have for the kind of company it is. When you're looking at promoter holdings, 72% held by promoters, FIs hold approximately 5, DIs hold approximately 9, and the public holds 14%. Some very decent institutional interest for the size of the company that this is. So that is something also that you want to keep in mind. Last off, with regard to valuations, I want to quickly summarize that valuations trade at roughly 12 times 1 year forward. If that double-digit growth were to come through, of course, that comes under question given the monsoon this year. When you're looking at the 5-year average, broadly the same, maybe slight discount to 5-year average. 5-year range is 8 to 20 times, so it goes back to 20 times if at all things start getting better. You're looking at Insecticides India versus peers. Dhanuka trades at 17. Bharat Rasayan, the closest competitors, trade at around 17 times. Insecticides India trades at approximately 15 times. So valuation-wise as well, we're neutral with regard to the way it stacks up versus competitors and versus itself based on past averages. Let me bring on board Mr. Rajesh Agarwal, who's Managing Director at Insecticides India. Mr. Agarwal, great having you, and thank you so much for joining us. Give us a sense, first off. Monsoon looks difficult this year. You haven't changed your growth guidance, though, from what I have understood. Talk to us about why you're positive with regard to growth, despite what could be a difficult monsoon this year, because your business is completely linked to the monsoon, sir.
Yeah, it's true that monsoon brings up the sentiment of the farmer, but India is a very vast country, and the effect of monsoon differs from one area to another. When we talk about North India, UP, Punjab, Haryana, majorly the major farmer grows rice, and the dry crops are very, very limited towards Rajasthan. And in Rajasthan also, in parts of Srinagar and Hanumangarh, these days, wherever Indira Gandhi Canal is going, you see a lot of rice sowing is taking place. So this rice is a safe crop generally because they get water from canals and also from the ground. And the dry crops, yes, there are changes in small patterns because sometimes the cotton goes up, and then these days the cotton in North India is coming down, and other crop like pulses and some other dry crops are going up. In the central part of the country, yes, the dependence on monsoon is very, very high because the catchment areas have to get the water and then they have to go for different crops. But the trend is not very 100% clear. But in certain parts of the country, particularly in South India and Central India, the expectation is that chili crop, the cotton crop are going to increase. And wherever paddy is possible, farmer is going to go for paddy in these areas. East generally is going for paddy. So the risk of monsoon is different in different areas. Yes, monsoon is very, very essential for the kharif crop, and it not only improves the sentiment of the farmer, but also overall of the trade, and the pest infestation, the weed infestation, the disease infestation, everything goes high with the monsoon winds in place, basically, because of the wet climate. So, but still I am hopeful that this should be a positive year. So far, we are maintaining what we did last year, but I see the growth coming in this quarter.
Okay, so growth will come in for you is what you're suggesting. If so, what is the kind of FY27 growth guidance that you have, and at what point, if at all a risk were to materialize, would it materialize, and what's the lower and the upper end of the growth guidance that you're giving?
We are not calculated that way, but we are very, very confident of a double-digit growth in this fiscal. So I believe that we should be able to achieve it easily. There are a lot of new launches. There is a focus on variety of products which we are doing across different crops. So even if we miss out at one or two segments, then also there is a chance of 5-6 other segments playing. So with the variety of products, more than a dozen, which we are focusing, which are a part of our Focus Maharatna range, I'm very, very confident of this growth coming in June, July, August months.
That's very encouraging, Mr. Agarwal, from what you're saying. that you're very confident because of the new launches that have come through as well. So what's the broad level guidance? Double digit is too vast in terms of the guidance itself. So is it going to be 10%? Is it going to be 15? Could you put a number to it, sir?
Giving a number at this stage is little difficult actually, but it will be, yes, a decent double-digit growth. It depends on the monsoon's play because we are waiting for the monsoon. There are some pre-monsoon showers in some areas. In southern tip, the monsoon had already touched. So let the details come in and the effect of that sowing, because if the sowing is in time and it receives the good rain and the crop starts, then the things become positive. And if there are large gaps in the rains, yes, it can impact. So we have to keep the fingers crossed looking at the current scenario. But still, I'm quite hopeful that with the variety we are going to play across different crops, we should get this growth.
There are larger risks geography-wise. So say certain geographies get more impacted by rain versus others. You said central is more impacted. How concentrated are you within that central belt?
We are present everywhere. North, being our north-based company, is a very big market for us. Similarly, South is very large market because they are large. Central India is an upcoming market for us where we are reasonably placed, basically. So the market share comes to around 5% from this area, and we have very strong growth plans, particularly from Gujarat, MP, and Maharashtra states. Even Chhattisgarh, we wish to grow in a big way. So there are different crops to handle in these areas, and we are present across all crops.
And these new launches that you've made, you spoke about around 6 new launches which have come through. Talk to us about the kind of product that it is. Is it premium product? Is it better margins? Give us some color around that.
The new products, whatever we are bringing these days, are coming either through our collaborations or they are coming through our R&D. So mostly all the launches which are coming are the part of Maharatna range of products. And this year, the 2 products which are coming from Corteva are the part of our focus Maharatna range. And our focus here will be very, very high. And these are incidentally both insecticides. But we are not only skewed to insecticides, so we are bringing in more herbicides, fungicides, insecticides, everything. And you will see various launches coming in various stages during this season.
Okay, so, but 6, right, in particular, is that the number that I can hold you there for?
About 5-6 launches will be there in this year, actually, yes.
5 to 6 launches, and first half of the year, I'm guessing, because that's seasonal for you.
Yeah, majority will be in the first half itself.
Understood. And are they margin accretive products for you? And typically in year 1, what's the kind of sales run rate that you would like to clock on products like that?
In totality, the contribution will not be less than 100 crore from the new products which are going to come in this season, the B2C segment.
And the margins, is it margin accretive for you? 100 crore is large for you, sir. That's like 5% of top line. So that itself gives you a kicker in terms of growth.
Yeah, of course. The margins will also be good actually because they are the part of Maharatna range. So the contribution will be 30% plus.
Could you give us some color, Maharatna versus your traditional products? What's the kind of margin number that you typically clock? My understanding is it's probably mid-single digit on the traditional versus, probably 15% on Maharatna. Is that broadly right?
Yeah, if we talk on the gross level, that's correct actually. Or EBITDA level also, it's broadly correct that the Maharatna and the focus Maharatna are the large profit-giving products, and the others are a bit trailing products with single-digit margins. That's true.
And that you're talking about towards Maharatna products, you've spoken about it on various conference calls. Talk to us about how quickly that shift can happen, because you're currently, my understanding is you're roughly 55 to 58% of top line comes from the premium products. You're taking it to 70. How quickly can you take it there? Now, given these 5 to 6 new launches, can you take it there in the coming year itself, in FY27?
No, this will take about 3 to 4 years' time in reaching that target, because that's my internal vision that we should cross 70% in terms of the focus Maharatna and Maharatna products. So we are going in that direction. We have already crossed 60 in terms of B2C sales, B2C business. So this will keep on going up year on year. You will see that 2-3% type of growth will come. There may be certain years where it can touch 4%. But let's keep the fingers crossed for the exact number.
Sure, sure. So, okay, so 3 to 4 years is the outlook. And with regard to the, I want to take a bit of a step back, try and get your perspective on what's playing out with regard to working capital and goods return. Last year, there was around 200 crore of goods return. What's the risk of that happening in the current year? And how are you optimizing working capital? Maybe both those questions, if I can club together.
Okay. So we are keeping our inventories at a reasonable level and we are dividing the products. So we are trying to put the products in the smaller quantities. The previous year, our June sales were very, very high. Now we are going step by step and placing in different territories and different volumes. And we are also overseeing that there is no over sales or over quantities put to any distributor based on their past performances. And then we have started working with the retailers and also the farmers, and we are trying to create the demand from the ground so that the whatever material goes to the market, it gets sold off.
And with regard to working capital, how do you optimize it? How does working capital days come off? What's the goal there in terms of the numbers and the metric?
We are continuously working on our inventories. We are trying to use the more better processes to control the total inventory levels. And you will see the total inventory number falling from the June quarter itself.
Okay, June quarter itself, there'll be an unwind with regard to inventory. How much, if you can quantify that for us in terms of a number?
Difficult to give the number today, but yes, there will be a fall in the inventory level, that I can assure you.
Okay, point taken. Mr. Agarwal, the last piece is with regard to exports. My understanding is you were at 5% end of FY25. What are you currently at the end of FY26 in terms of exports? What's that number you're at? And the aspiration is to get to double digit in terms of revenue mix to exports. What will, one, be the lever there? Two, what are the margins for exports? And three, how quickly do you get to 10%?
There are three types of targets actually. Number one is we have started increasing our technical sales. And this technical sales is going to the Western world, more to CIS countries, to Europe, to America, to Latin America, and some other countries. So we are focusing around these, also to Asian countries. So yes, when the technical sales give more volumes and more business. Number two, we have started working for CRAMS agreements, and we are seeing that we should sign certain agreements with various companies, and small supplies are going to start from this month. And let's see how it it grows in future. And we are also anticipating various registrations in America and Latin America and Europe. So all these factors put together are going to give growth to company.
So 10% mix by maybe next year, FY28?
It might take initially 2 years or 3 years time. But once the things start happening, then yes, the figures will change, because the day the CRAMS agreements which we have signed, which we are working to make the business bigger, the rotation starts, then yes, of course, the business will grow.
Right, and the margin, EBITDA margin is 15% over here in this segment?
It might vary from 10 to 15%. Straight away saying 15 might be difficult.
Okay, fair point. Thank you so much, Mr. Agarwal, for coming in and speaking to us.
Thank you.
All right, viewers, that's all the time we have on this edition of All About Your Company. Thanks so much for tuning in. More action on the other side. You want to stay tuned here on ET Now.